Hello everyone, this is Grace here. In this video, we'll be discussing problem 4.11. Compute a conservative estimate of profit on a contract which is 80% complete. From the following particulars, illustrate at least 4 methods of computing the profit transferable to profit and loss account. So we have already solved problems where the profit percentage of profit which will be transferred to profit and loss, where what are the various formulas which you can use to estimate what is the profit to be transferred. So the same method will be opted here, but in this they have given us total expenditure, estimated further expenditure to complete the contract, including contingencies, contract price, work certified, work not certified, and they've given us cash received. When cash received is given, so here they've given us estimated expenditure, we will have calculations of notional profit and calculation of estimated profit. So under calculation of notional profit, we will be taking work certified and work not certified, which is 1 lakh plus 8,500. So 1 lakh plus 8,500 will give you 1 lakh 8,500. With that, we will minus the actual expenditure what has been incurred. So the total expenditure which is incurred is 85,000. So 1 lakh 8,500 minus 85,000 will give you your notional profit, which is 23,500. So next is a calculation of estimated profit. So to calculate estimated profit, we will be taking contract price, which is 1,53,000 minus expenditure incurred and the estimated expenditure. So the actual expenditure which has been incurred is 85,000. With 85,000 we will minus 17,000. So 85,000 plus 17,000 will be added up to minus with the contract price to find out the estimated profit. So actual expenditure is 85,000 plus 17,000 of further or future expenditure, which is estimated, which will give you 1,02,000. So contract price 1,53,000 minus the expenditure and as well as the estimated expenditure of 1,02,000 will give you 51,000. So this is how we calculate what is the notional profit. So to find out notional profit from work in progress items, that is work certified and work not certified minus the expenditures, actual expenditure which is incurred, you will get your notional profit. To find out estimated profit, from the contract price we will minus the expenditures which is incurred as well as the estimated expenditures to find out what is your estimated profit. With this estimated profit, we will have to calculate the different methods or at least 4 methods for computing the profit transferable to profit and loss account. So the formulas are, or methods of computing profit to be transferred to profit and loss account are: notional profit into two-third into cash ratio, notional profit into two-third, estimated profit into work certified divided by contract price into cash ratio, estimated profit into total cost to date divided by estimated total cost into cash ratio. Please at least know these formulas by heart, so it will be simple for you all to form, which if you are getting these problems by chance, you may also get for 6 marks, or you can also get at least 2 methods of computing profit to be transferred to profit and loss for 2 marks. So to transfer notional profit into two-third into cash ratio. So the notional profit what you've got is 23,500 into two-third is two-third into cash received divided by work certified, So cash received. So cash received is 81,600 divided by work certified, which is 1 lakh, which will give you rupees 12 lakh 784 approximately. Next, notional profit into two-third. So notional profit is 23,500 into two-third will give you 15,667, which is approximate amount. Next, for estimated profit into work certified divided by contract price into cash ratio. So your estimated profit what you have got is 51,000 into work certified is 1 lakh divided by contract price as per the question is 1,53,000 into cash ratio is 81,000 divided by 81,000 is the cash received divided by work certified 1 lakh, which will give you rupees 27,200. The other method is estimated profit into total cost to date. So what is the total cost to date divided by estimated total cost? So total cost to date in the question is 85,000, that is your actual expenditure. So estimated profit, which is 51,000, into total cost is 85,000, estimated cost is 17,000. So 85,000 divided by 1,02,000. So how did you get 1,02,000 is your 17,000 estimated cost plus your expenditure what you have incurred, the total of it. So it is estimated total cost. So 17,000 plus 85,000 will give you 1,02,000 into cash ratio, which is cash received 81,600 divided by work certified, which is 1 lakh, will give you 30 rupees 34,680. So these are the various methods and formulas for estimated profit as well as notional profit to carry out to calculate approximate profit which is to be transferred to profit and loss account. So the next problem is problem 4.12. An expenditure of rupees 3,88,000 has been incurred on a contract up to the end of 31st December 2015. The value of the work certified is 4,40,000. The cost of works uncertified is rupees 12,000. It is estimated that the contract will be completed by 31st March 2016. An additional expenditure of rupees 80,000 will have to be incurred to complete the contract. The total estimated expenditure on the contract is to include a provision of 2.5% for contingencies. The contract price is 5,60,000 and rupees 4 lakh has been realized in cash up to 31st December 2015. Calculate the proportion of the profit to be taken to profit and loss account as on 31st December 2015 under different methods. So it is a similar kind of the problem what we have solved. The same method will be used and the same formulas will also be used here. So when we come to the solution, first part is to calculation of a notional profit. To calculate the notional profit, formula will be work certified plus work uncertified minus cost up to date. When it is estimated from the contract price, we will minus the expenditure which is incurred and as well as the estimated expenditure which has been incurred. So with the notional profit, value of work certified is an expenditure of rupees 3,88,000 has been incurred on a contract up to the end of 31st December. So this will be your expenses which has been incurred up to date. The value of the work certified is 4,40,000. So to calculate notional profit, value of work certified 4,40,000 will be recorded. The cost of work uncertified is also given. So add work cost of work are not certified, which is 12,000. It is estimated that the contract will be completed by 31st March 2016. Now we have added your work certified and uncertified, which will give you 4,52,000. With that, we will minus the expenditure which is incurred, which is 3,88,000, which will give you 4,52,000 minus 3,88,000 will give you 64,000 of notional profit. Next, we are supposed to calculate estimated profit on full contract. So we need to have the contract price. So if you look into the question, they have stated it is estimated that the contract will be completed by 31st March 2016. An additional expenditure of rupees 80,000 will be incurred to complete the contract. So the normal expenditure which is incurred is 3,88,000. Additional expenditure is estimated. So this is the estimated expenditure 80,000. The total estimated expenditure on the contract is to include a provision of 2% for contingency. We have stated here, along with the expenditure which is actually incurred and along with the estimated expenditure of 80,000 plus 3,88,000 which is already incurred, there is 2.5% of provision which is being maintained for contingency. Contingency is for future uncertainties. So what will happen in the future? In order to avoid such risk, a certain amount will be kept as provision that is to be added with the estimated expenses. Then they've given us contract price. So as they have given the contract price 5,60,000, we can calculate our notional estimated profit along with the contract price, and for rupees 4 lakh has been realized in cash and 4 lakh has been received as cash. So this will be useful to calculate or use it in the formula. So now estimated profit on full contract price is 5,60,000. With this we will minus cost up to date, which is 3,88,000, plus 80,000 which has been estimated, along with this 2.5% of contingency where a provision is made on the contract. So uh, so the total expenditure on the contract is to include a provision of 2.5% for contingency. So this 2.5% contingency as provision will be calculated on the total expenditure. So what is the total expenditure is 3,88,000 plus 80,000, which will give you, which will 3,88,000 plus 80,000, which will give you 4,68,000. So this 4,68,000 into 2.5 percentage. So into 2.5 percentage into 2.5 divided by 97.5. So how did we get 97.5 is, in the question they have clearly stated that the total estimated expenditure on the contract is to include a provision of 2.5% for contingency. So the total expenditure includes this 2.5. So we will assume the total expenditure to be 100%. Out of this 100%, 2.5 is provision for contingency. So the expenditure what we have till now is only for 97.2 97.5. The remaining 2.5 is supposed to be found out. So we will cross multiply. For 97.5 it is 4 lakh, it is 4,68,000. Then for 2.5 how much is it? So when we cross multiply, the answer will be 4,68,000 into 2.5 divided by 97.5. So how did you get 4,68,000 is 3,88,000 plus 80,000 will give you 4,68,000. So now we will cross multiply 4,68,000 into 2.5 divided by 9.75. So how did you get 97.5 is 100% is the total expenditure. In this 100%, the contingent provision for contingent expenses will include this 100%. So we have expenditure only for 97.5%. The remaining 2.5% of expenditure is not been added with the total expenditure. So for 97.5%, the expenditure is 4 lakh 68,000. Then for 2.5 how much is it? So when we cross multiply we will get 4,68,000 into 2.5 divided by 97.5. So the answer is 12,000, which has been kept as provision for contingencies. So we will have to add up the contingencies to get 100% expenditure. So your cost to date, which is 3,88,000, plus further cost, which is 80,000, plus contingencies, which has been maintained provision, 12,000. So the total expenditure along with the estimated expenditure will give you 4,80,000. So 5,60,000 minus 4,80,000 will give you estimated profit of 80,000. So these are the various methods of profit to be transferred to profit and loss account. So first method is notional profit into 2/3. So notional profit is how much? 64,000 into 2/3 of it will give you 42,667, which is approximate. Next method is notional profit into 2/3 into cash ratio, which is nothing but cash received divided by work certified. So 64,000 is notional profit into 2/3 into cash received, which is stated in the question, which is 4 lakh has been realized in cash. 4 lakh divided by work certified is 4,40,000, which will give you approximately rupees 38,788. Next is your estimated profit calculation. Estimated profit into work certified divided by contract price in contract price. So estimated profit is 80,000. Estimated profit is 80,000. So estimated profit 80,000 into 4,40,000 divided by 5,60,000 is your contract price. You will be getting approximately rupees 62,857. So the next method, estimated profit into work certified divided by contract price into cash ratio. Cash received divided by work certified. That is 80,000 into work certified 4,40,000 divided by contract price 5,60,000 into cash ratio, cash received 4 lakh divided by 4,40,000 of work certified. You will be getting 57,143. Or you can also use the formula which has been used in the previous problem, that is estimated profit into total cost to date divided by estimated total cost into cash ratio. So please remember all these formulas when such type of questions is asked. It's very simple to solve.
Next problem is problem number 4.13. The following information relates to a building contract for rupees 10 lakh. Materials issued for 2 years, year 2015 and year 2016. Materials issued, direct wages, direct expenses, indirect expenses will appear in the debit column of your contract account. Work certified, uncertified will appear in the credit column. Materials at site in your debit. Plant issued at debit. Cash received from the contractee will be used in the formulas what we use. Then the value of plant at the end of 2015 and 2016 was rupees 7,000 and rupees 5,000 respectively. Prepare contract account. Construction contractee account for 2 years 2015 and 16, taking into consideration such profit for transfer to profit and loss account as you think proper. So we'll be preparing contract account for 2 years, that is 2015 and 16. So now first we will take the items related to your debit side. So materials issued 3 lakh for 2015, 3 lakh is taken. Then 2 direct wages 2,30,000, 2 direct expenses 22,000, indirect expenses 6,000. Then we have work certified, work uncertified. So we will be taking under the heading by work in progress, work certified which is 7,50,000, work uncertified which is 8,000. So the total of it will give you 7,58,000. By materials at site, which is 5,000. So after this we have plant issued. So plant issued is the value of the plant in the beginning of the year. Then they have given the value of plant at the end of 2015 and 16 is 7,000 and 5,000. So there are two methods of recording of plant if there is any depreciation value given in the problem. One is you can write your opening value, opening balance in your debit side and your closing balance in the credit side. As I have stated here, you can write to plant issued 14,000 here. Then by plant at the end you can write 7,000 because they have given here value of plant at the end of 2015 and 16 is rupees 7,000. So either way you can do, or you can directly write to depreciation on plant rupees 14,000 minus 7,000. So how did you get 14,000 is plant issued is 14,000. Then they have clearly stated the value of plant at the end of 2015 and 16 is 7,000. So 14,000 minus 7,000. This is opening balance, this is closing balance. So the difference what you get is the depreciation for the year 2015. So 7,000 is the depreciation. Then you have materials at site. So materials at site which is 5,000. So usually materials will be taken in your debit column, but in this problem we have shown it in the credit side because material is already been issued here, that is two materials 3 lakh. At the end they have stated material at site which is 5,000. So this is to be considered that this material at site is always the material which is at the end of the year. Material in site, and they have given material in site, and sometimes in the problem at site they will give you in the bracket 31st December, or sometimes they will not mention materials at site, they just mention it as material at site. So when material at site is given, that will be the materials which is used for the which is after usage of the materials, the remaining materials which is kept at the site without use. So that will be in your credit side. Only the inputs and which is used for the contract will be considered in your debit side. So you can look into the other problems what we have solved. The same thing will be followed. Material sent to material received from warehouse, material returned from stores, or material issued to the site. So all these items will appear in your debit side. So by materials at site they are mentioned. For this materials can be used or it cannot. It can be the remaining materials which is after completing the contract. So materials at site will be considered as your output, that is that you will be taking it in your credit side. So which is material at site, which is 5,000 rupees will be taken here. So when we total up the difference, you will be getting in your debit side. The total of your credit items, you will get 7,58,000 plus 5,000, which will give you 7,63,000. So 7,63,000 minus 3,000, I'm sorry, 3 lakh, 2 lakh 30,000, 22,000 minus 6,000 minus 7,000 will give you a difference of 1 lakh 98,000 is your profit what you have earned. So this profit will be brought down. So by balance brought down, which is 1 lakh 98,000. So this balance will be divided to your profit and loss account and to your reserves. So how will you calculate, or how are you going to divide it to your profit and loss and in your to your reserves is, first you will find out the percentage of work completed. So the percentage of work completed formula is work certified divided by contract price. So for 2015, work certified is 7,50,000. So 7,50,000 divided by contract price. So the contract price which is given here is for this problem is 10 lakh. So 7,50,000 divided by 10 lakh, which will give you 75%. So in this 75%, which lies in the slab 2 by 3. So the formula will be anything which is from 50 to 90%. The formula will be notional profit into 2/3 into cash ratio. Cash ratio is nothing but cash received divided by work certified. So your notional profit what you have got is 1,98,000 into 2 divided by 3 into 6 lakh divided by 6 lakh is your cash received in your year 2015. You can see cash received from the contract is 6 lakh. 6 lakh divided by 7,50,000, which will give you 92,000 for 1,05,600 is your profit, which will be transferred to your profit and loss account. So out of total profit 1,98,000, the amount which is transferred to profit and loss account is 1,05,600. The remaining, the difference between 1,98,000 minus 1,05,600 will give you 92,400. So 92,400 will be transferred to your reserves account. So now we will be preparing the next year's contract. So year 2016. So this contract takes 2 years to be completed. So from 2015 we have done, and the work in progress which is there for the 2015 will be carried forward, or which will be brought down to 2016 because the contract is still not completed. So that work will be carried down to 2016. So we will continue year 2016. So by work in progress items of 2015 will be carried down. So to work in progress, certified, uncertified, 7,50,000 plus 8,000, which will give you 7,58,000. So out of this work in progress, we will minus the profit in reserve. The reserve what you have, the amount which you have transferred to reserve, because that will be used for your future benefit, future expansion, which will not be touched now. So it will not be touched now. So that reserves will be minus from the amount what you have got. So from 7,58,000 minus the reserve to know exactly how much we are using. So profit in reserve, which is 92,400. So 7,58,000 minus 92,400 will give you 6,65,600. Next we have materials issued 84,000, which we have taken. Materials issued 84,000. Then we have brought the work in progress from 2015 to 2016. The same way, materials of 2015 which is not used will also be brought to 2016 to continue for usage. So two materials at site brought down, which is 5,000. Next, materials issued is taken, which is 84,000. Then direct wages in the problem is 1,05,000. Then direct expenses is 10,000. Then indirect expenses, which is 1,400. Then we have work certified, which will be work certified, which is mentioned in the problem is 10 lakh, and there is no work uncertified because the contract is completed after 2 years. So this 10 lakh is nothing but your contract price. So you will be writing by contractee's account, as the contractee is giving you the money, you will be writing by contractee account 10 lakh. So by contractee 10 lakh. Then now after this we have materials at site, which is the materials which is not used and which is kept at the site as an asset, so which is 7,000. So buy materials at site 7,000. The other expenses are, we have plant issued. So plant issued is 2,000 here. So we will be taking the depreciation value here. So as we have taken only the depreciation value in the previous year, we will be considering only depreciation value. So to depreciation on plant. So this is one contract for the 2 years figures is being shown. So the depreciation, how will you calculate is, the value of the asset in the beginning of the year is 14,000. In the year 2015, how much is the value of asset? Plant issued 14,000. Then when in the beginning of the year it was 14,000, plus at the end of the year, at the year 2016, they have stated the asset value is 2,000. So 14,000 plus 2,000, which will give you 16,000. The 16,000, the value of the asset at the end of the year for 2015 is 7,000 and 5,000. So we will minus these items and we will find out what is the depreciation. Whenever you calculate the depreciation, you will carry down the asset value from years to years, and then you will charge the depreciation on it. The same method is being followed here. So the depreciation on plant, both the year 2015 balance will be brought down, as well as 2016 value of the asset also will be added on. So the total asset value is 14,000 plus 2,000 of the plant, which will give you 16,000. With that, we will minus the value of the asset at the end of the year, which is 7,000 and 5,000. Why we are minusing is to find out the depreciation value. So which will give you here 14,000 plus 2,000 minus 7,000 and minus 5,000, which will give you the difference of 4,000. So the depreciation amount is 4,000. So this is the one of the method to account your depreciation of plant. Or you can show the opening balance of plant here, as well as the closing balance of the plant in your credit side. So your opening balance of the plant can be 14,000 plus 2,000, which is 16,000. Then the closing you can show by plant 7,000 plus 5,000. 7,000 plus 5,000, which will be giving you 12,000. So the closing balance will be 12,000. So either way, or you can directly minus and show your depreciation here, which we have done in this problem. Next, if you find out the difference, your credit side has the more balance, so which will give you 10,07,000, and there is difference in your debit column. So the difference is 10,07,000 minus 6,65,600 minus 5,000 minus 84,000 minus 1,05,000 minus 10,000 minus 1,400 minus 4,000, and the difference what you're getting is 1,32,000 is the profit. So here, as the contract is completed, there is nothing to be required to be transferred to your reserves account. Only when the contract is incomplete or it is not completed up to the percentage, a certain amount will be transferred to the reserve to use that money for the upcoming contract work. But here the contract is completed, so the entire amount will be transferred to your profit and loss account. So we have prepared contract account. They have also asked us to prepare contractees account for the 2 years. So your contractees account, particulars amount 2015 to balance by your receiving cash. How much cash you're receiving? 6 lakh for 2015. So by cash you're receiving from the contractee, so cash account debtor to contractees account 6 lakh, and this balance will be carried down 6 lakh. So the balancing figure is 6 lakh. So this opening balance, closing balance will be carried down for the next year 2016 as your opening balance. So by balance brought down 6 lakh, and for the year 2016, how much is the contract amount you have received totally is 10 lakh. So previous year 2015 you have received 6 lakh, and now you have cash received which is 10 lakh. So how much? What is your contract price? Your contract price is 10 lakh. So your total contract price is 10 lakh. In the first year you have received 6 and the remaining is 4 lakh. The same thing is shown here. So 6 lakh which you have brought down. 6 lakh which you have brought down 6 lakh, and the remaining balance what you're supposed to receive, or the amount what you have received for the contract from the contractee is to contract account 10 lakh. So the balancing figure is 4 lakh which you have received for this current year, that is 2016. So the total contract amount you have received. Thank you everyone. The other problems will be discussed in your upcoming videos.